Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name is Manpreet and welcome to Cut to the Chase. Now today is International Guide Dog Day, a day celebrated on the last Wednesday of each April. Guide dogs make a huge difference to help the visually impaired make their way through the world, with references dating back to at least the 16th century, so it's an opportune time to recognize their contribution to our society. Now as investors, a little bit more guidance certainly wouldn't hurt on a day like today. US equity markets had another big down day, much more so than the more muted response in Europe and Asia. With at the headline level, the S&P 500 was down 2.8%, bringing it very close to the bottom of the range from mid-March, while the Nasdaq was down almost 4%, emphasizing again how much of yesterday's pain was concentrated in the technology sector. Couple of observations we think that really stood out. First is that much of the market pain yesterday appeared linked to an earnings disappointment by a tech sector firm that is a large share of the broader market capitalization. However, the drivers of the disappointment, just slower ad spend, raised some broader macro questions about the risk to economic growth. The US did release consumer confidence data yesterday though, which was largely unchanged from the prior month. And second, there were concerns about COVID lockdowns in China and the impact on global growth, which were undoubtedly also contributing factors. One media report, for example, quoted Chinese President Xi as asking officials to ensure China's economy outperformed that of the US, where consensus, of course, expects a much lower headline GDP growth number than China's official target. Now, as an investor, we believe there are four key takeaways from yesterday's market move. First, we'd still await a more aggregate picture of earnings over the course of the full week, given the behavior of some individual stocks that a large share of S&P 500 market cap can have a disproportionate impact on the headline index. This leads to my second point, which is that a sector strategy can still be very helpful in today's markets. It's just one day, but it's interesting that yesterday it was the technology, consumer discretionary and communication services sectors that led the fall, while the preferred sectors of financials, healthcare and energy did outperform, with energy being the only sector that delivered slightly positive returns. Third is that we shouldn't ignore diversification. Again, it's just a day, but while US equities were down, after quite some time we saw bonds and gold, of course, being up and helping offset that move. Gold in particular is looking interesting to us given it's now rebounding from a key technical support area in the 1875 to 1890 region. Finally, whether the S&P 500 rebounds from the bottom of its recent range will be quite key from a technical point of view over the next few days. Now that's of course on US equity markets, but the other key event we'd keep a close watch on in the next couple of days is the Bank of Japan meeting that kicks off today. Japanese yen did rebound on speculation that the central or bank or government could intervene to stabilize the currency. However, Japan's finance minister denied media reports that he discussed joint intervention with the US and later said he was closely watching exchange market movements with a sense of urgency. Bank of Japan officials, though, have shown no indication that they plan to deviate from current policy. Now, our view continues to be that exposure to the yen now warrants caution given extreme one-sided positioning and the risk of intervention, or at least the expectations of it, can lead to large moves in either direction. So have a read of our daily FX Navigator for both our current preferences on both the long and funding side in FX markets. So a few things to focus on, particularly on equity markets, but also not to lose sight of the yen and the Bank of Japan meeting, but we'll take a pause there. As always, if you enjoyed the podcast, please don't forget to rate and like it. Thanks for listening. We wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.